Lockheed Martin, down 3%. Northrop Grumman, down 4%. RTX and General Dynamics, down 2%. In a single trading session, billions of dollars in market capitalization vanished from the most powerful industry on the face of the earth. But it wasn't because of a failed weapons test. It wasn't because of a new peace treaty. And it certainly wasn't because the government stopped spending money. It happened because the President of the United States just signed an executive order that does something most political analysts told you was impossible. He didn't just ask defense contractors to lower costs, he capped their CEO pay. And he froze their stock buybacks. Let that sink in for a moment. We are talking about an industry that has effectively owned Washington, D.C. for the better part of 4 decades, an industry that writes the legislation that funds it. And yet, on Tuesday, the White House released a document titled Prioritizing the Warfighter in Defense Contracting. Buried inside the legalese of that order is a provision that ties executive compensation not to share price, but to the salary of a member of the Joint Chiefs of Staff. Consider the math. A defense CEO makes tens of millions. A general makes a fraction of that. This is the single largest interference in the internal governance of the military-industrial complex since the end of the Cold War. And if you look at the front pages of the major networks today, you might see headlines about volatility. You might see headlines about market jitters. But you aren't hearing the real story. The real story is that the unspoken deal between the Pentagon, Wall Street, and the White House just broke. Welcome to DC Daily Brief. I'm your host. Let's look at how this story is being sold to you, because the framing is just as important as the facts. If you open the business pages, Barron's, Forbes, Fox Business, the narrative is being constructed around one specific word: uncertainty. Forbes reports that defense contractors fell as the president proposes pay cap. They focus heavily on the stock percentages. They discuss the frustration of investors. Barron's takes it a step further, advising investors to look at property stocks instead, noting that while defense is taking a hit, the administration is pushing housing deregulation. Do you see the technique? This is framing language. By focusing on the stock ticker, the media treats this as a financial story. It becomes a story about investor sentiment and shareholder value. They are asking, what does this mean for your portfolio? They are not asking, why was the defense industry allowed to prioritize buybacks over readiness for 20 years? There is a massive omission here. The mainstream press is framing this as a conflict between the president and the market. But if you read the actual text of the executive order, which we will do in a moment, the conflict is framed as the boardroom versus the warfighter. This is a populist economic intervention that, if it came from a different political figure, would be labeled socialism or government overreach, by the very same outlets currently calling it bold or simply disruptive. Fox Business reports that the order blocks companies from buying back stock until arms production improves. That "until" is the most important word in the news cycle, and it is the one being glossed over. The media is presenting this as a punishment. However, the administration is framing it as a conditional incentive. The narrative emerging from the establishment press is one of shock. They are acting as if this came out of nowhere. But Breaking Defense reported that the president explicitly warned CEOs to beware of coming limits on share buybacks and salary. The warning was there. The establishment just didn't believe he would actually do it. They thought it was leverage. They thought it was talk. Now that the ink is dry, the media mechanism is scrambling to protect the status quo without explicitly defending the concept of massive CEO payouts. They can't defend the salaries, so they defend the market stability. That is the game. Let's put the spin aside and look at the documentation. We are working primarily from the text of the executive order released by the White House titled Prioritizing the Warfighter in Defense Contracting and the subsequent reporting on its implementation. Here is what we know based on the official filings and signed orders. According to the White House release, defense contractors are now prohibited from engaging in share repurchases if they cannot demonstrate that they have met specific capacity and readiness metrics. This is critical. A stock buyback is when a company uses its cash to buy its own shares from the marketplace, reducing the number of outstanding shares and artificially inflating the price of the remaining ones. It benefits shareholders and executives paid in stock. It does not build tanks. It does not forge artillery shells. The order mandates the creation of Warfighter priority plans. These plans compel contractors to prioritize, in writing, delivery timelines and manufacturing capacity over shareholder returns. This is the detail that caused the sell-off. The order directs the Department of Defense to restructure contracts so that executive compensation costs allocated to government contracts are capped. The benchmark? The salary of a member of the Joint Chiefs of Staff. While we don't have the final codified dollar amount down to the cent in this broadcast, we know that military general pay is defined by statutory limits. We are talking about the low hundreds of thousands. Defense CEOs, according to Forbes and standard market data, frequently earn packages worth tens of millions. The discrepancy is not a percentage point. It is an order of magnitude. On Tuesday, the warning was issued. Breaking Defense confirms the president told CEOs to beware. On the same day, the executive order was signed. Immediately following the news, the markets reacted. Forbes data shows Northrop Grumman dropped 4%. Lockheed Martin dropped 3%. RTX and General Dynamics dropped 2%. This is a crucial piece of evidence provided by Axios and Barron's. At the same time this hammer dropped on defense, the administration signaled a massive deregulation push in the housing sector. Barron's notes that while defense stocks slumped, property stocks are being flagged as the new growth vehicle. This suggests a coordinated economic strategy. Move capital out of defense speculation and into domestic construction. Here is what we don't know yet. We do not know the enforcement mechanism for the Warfighter priority plans. We do not know if the pay cap applies to the total compensation of the CEO from all sources or strictly the amount the government will reimburse the company for. That distinction is vital. If the company can still pay the CEO $20 million out of their own profit, the cap is symbolic. If the order prevents the company from paying it entirely as a condition of the contract, it is structural. The language regarding prioritizing suggests strict compliance, but we need to see the Pentagon's acquisition guidance, which has not yet been leaked or released. But based on the stock market's violent reaction, the investors believe this is real. Now let's look at how the players are reacting. The silence from the political establishment is deafening. Usually, when a president interferes with private enterprise to this degree, you would hear immediate cries of command economy or statism from the traditional business lobby. But they are trapped. They cannot go on television and argue. It is vital for national security that the CEO of Lockheed Martin makes 500 times more than the general utilizing their equipment. That is a losing political argument. So they are staying quiet. Instead, we are seeing the reaction play out in the financial press. Barron's and Forbes are acting as the voice of the aggrieved investor. They are highlighting the losses. They are interviewing analysts who use terms like heavy-handed. They are trying to shift the conversation to efficiency. The argument bubbling up is that if you cap pay, you will lose top talent. This is a narrative we need to mock specifically. Are we to believe that the top talent required to manage a government monopoly contract will simply quit if they can only make a few $1,000,000 instead of $30 million? And if they do quit, where exactly are they going to go? The hypocrisy here is evident in the selective outrage. When unions demand pay raises, the financial press discusses inflationary pressure. When the president caps CEO pay to fund military readiness, the financial press discusses market distortion. The reaction from the administration is also notable. They are coupling this stick with a carrot in a completely different sector. By pushing the housing narrative simultaneously, as reported by Axios, they are giving Wall Street an out. They are essentially saying, you can't make easy money gouging the Pentagon anymore. Go make money building houses. It is a masterful distraction. It divides the business community. The real estate developers are cheering, while the defense contractors are fuming. This prevents a unified corporate front against the administration. Watch the defense hawks in Congress. These are the representatives who usually rubber stamp the defense budget. They are currently in a state of paralysis. They cannot attack the president because his base loves this move. They cannot attack the policy because it is framed as pro-warfighter. They are completely neutralized. This brings us to what happens next. We need to look past the stock ticker and look at the incentives. The defense industry cannot win a public relations battle on CEO pay. They will lose every time. So they will change the battlefield. Within the next 72 hours, the media narrative will shift away from executive pay and toward job losses and national security risks. Expect to see anonymous sources inside the defense industry leaking stories to the Washington Post or the New York Times. These stories will claim that the confusion caused by this executive order is delaying critical weapons shipments. They will claim that the warfighter priority plans are too bureaucratic and are actually hurting the troops. They will try to weaponize the very group the president claims to be protecting. You will see a headline that looks like this: Defense experts warn new White House rules could stall missile production. They will threaten the blue-collar workforce. They will suggest that if they cannot do stock buybacks, they will have to close factories or lay off engineers. They will try to hold the economy hostage to get their buybacks back. Why do I predict this? Because it is the only card they have left to play. They cannot argue for greed. They must argue for readiness. Watch for this pivot. It will happen before the week is over. This is a story that goes to the heart of how money moves in Washington. And because it threatens the bottom line of the most powerful lobbyists in the Capitol, you are not going to get the full picture from the networks that rely on their advertising dollars. They don't want this information getting out in its raw form. They want it filtered, softened, and spun. If you want to help us fight the algorithm and spread the truth, you know what to do. Stay skeptical, stay informed. I'll see you tomorrow.